It is Monday, July 24th. We got some risks coming into the market. Let's just jump right into it. We do know, if you keep up with the content, oil is our biggest chart, right? Oil is the probably the most important chart right here. And oil looks like it is starting to actually break out. So this is a concern that I've had for a while. If we continue to break higher in oil, then inflation expectations are going to go higher, right? The inflation expectations go higher because of it's such a large component to inflation. Now, it does have two resistance levels, and it is past the first level. We're above the first level. We supported it. Very bullish price action now above that 200 daily moving average. So this is definitely a concern. And we got to keep our eye on this. So this is the most important chart right now, right? Zooming into, actually, no, I don't want to zoom into that. Let's make it a little bigger. Um, Make it a little bigger here in the window. Let's see, how can we make this better? There we go. So yeah, that's what we're looking like. That's what it's looking like right now is crude above those moving averages, pushing inflation higher for the next month. So this will be August. So the August CPI is going to be a little hot. The August CPI is going to be hotter than we expected because those base effects already took in place. And now that we got energy moving up, that's also going to add right to the risks. So keep your eye on that. We're keeping in mind oil's breaking out of this long downtrend. It's above those moving averages. If we go to the weekly chart, right, just taking a little, it has some resistance, right? We still have a lot of resistance there for it to not be a secular breakout, but just a short local, breakout, getting back to the previous resistance at 82, 83.50. So we'll keep our eye on that. And we got to stay, because this is a risk. This could keep the market moving sideways or even sell off if it continues to worsen. Right now, what is that actually doing to yields? I believe that bond yields, if inflation goes up, right, if the expectations for inflation go up, these yields are going to rise. And when you get higher yields or higher rates, you're going to get a stronger dollar. And right now we do have that dollar strength that's coming back into the trend. It's not complete, it's not over yet. This is just a retest. It broke down, so we get the break and the retest, and we're looking for the dollar to consolidate around here. Now, for the market, if the dollar does roll over, that's going to give one more variable. It's going to give us another variable for, a bounce in the market. That's one variable, right? Bond yields coming lower. That's another variable. We are starting to see some economic strength, though. This morning we did have the manufacturing, the PMI flash, the S&P PMI flash. So this is a reflection of what we might see, I believe, in about 7 days, in a month, when we get the August PMIs, or the August manufacturing activity, which is the leading economic, which is leading the business cycle, right? The US ISM PMI leads the business cycle, so we got to keep our eye on that. But that's also good news, because what it tells us, the economy is starting to recover. The economy is starting to recover. Now, if we jump over to the VIX, didn't really move, right? This is why I'm still not worried. I think every pullback is going to get bought up. I think we're going to get every pullback bought up. So the VIX is not flashing anything negative right now. The volatility of the VIX is still low. There is no risks yet that we're seeing. The market is not reacting to that. We go to Nasdaq volatility; it is consolidating at the lows, but this being repressed this bad is good news. It means that there's still buyers waiting for a dip, not so much buying insurance, not so much hedging against the VIX. The MOVE index, bond volatility coming lower. Good sign. Good sign. So this still tells us, hey, even though oil is going higher, right? Oil energy might be going higher. We might just see that rotation in the energy stocks. And we saw that last week. We saw more market breadth, right? We saw market breadth expand into energy, expand into financials, expand into industrials. So it's not necessarily a bad thing that oil is going higher, but it does create more inflation risks. Triple B spreads, right? Credit risk, non-existent. Credit risk is non-existent. We're in this base. The lower this goes, keep in mind, the lower we get triple B spreads going lower, the more people, investors, whatever you want to call it, are more on the side of investing in or taking risk in the equity market. So this is bullish for equity market, right? This is equity markets, equity market debt being bought up, or at least not being dumped. Okay, if we look at high yield bond spreads, high yields in general, HYG, high yield corporate bond ETF, or high yield debt, it's set for a breakout, right? It's setting up for a breakout. We don't know if it's breaking out yet, but look at that. Look at this breakout. Look at this wedge off the lows, okay? And if we continue to get this move, what we are seeing is equity debt getting bought up. The risks are coming off the table, and it looks like it is starting to wedge. Even if we dive in, you look a little deeper, it looks like it's starting to wedge here. So this is good. If we get high yield, if we get high yield, bonds or high yield debt, corporate credit, this is basically what it is, corporate credit. If we get a bid in corporate credit, well, that's going to help the balance sheets of a lot of companies. That means their debt is being bought up. There's less risk, and the equity is defaulting, or there's risk taken in the market. All right, looking at the S&P 500, we are consolidating against that resistance at 455. Big chance that we do pull back, right? Very big chance that we pull back in the 444 if earnings don't go well, right? If earnings don't go good, and we'll go over, we'll check out what earnings we have coming up this week and going forward. But S&P is just consolidating, right? Nothing really bad. We're not seeing the VIX spike. Okay, the Qs pulled back a lot. Qs are pulling right back, and I still think the Qs are leading. I think the Qs are still leading. They are, pulling back, but what you're seeing is the Qs pull back. You're seeing the Qs come into that previous resistance level, that previous resistance zone, while the Dow is breaking out, right? So you're seeing a rotation. We're getting the clear rotation from tech into value, right? From tech, you get the sell-off in tech right here, and it's going right into the value stock. So that's good. That's good market internals. Market breadth is here, right? We're going to get the rotation back into the Qs eventually. IWM, small caps are pulling back a little bit. That's fine. And if we look at the S&P equal weight, it is making new highs, right? It is making new highs. It made a new high this morning, pulled back a little bit, but the equal weighted S&P is still going higher. It has some resistance here, but good signs, right? Nothing too negative. We do have the Fed meeting this week, the interest rate decision. The market has already, excuse me for that noise. The market's already priced in the rate hike, right? The market already priced in the rate hike. We have earnings coming up, so we have a lot of catalysts this week, and we're going to go to the S&P PMI flash, which is how is the economy, looking going forward. We're going to look at that data also. All right. Before we go there, let's dive into crypto. Check out the crypto technicals really quick. Total crypto market is pulling back. Just can't hold on to that level, right? So, I mean, there's not much to say there. We really got to look into Bitcoin. You look at altcoins. Altcoins have been making a nice move. They're wedging. Okay, so we have the altcoin index right here. Total altcoins, this is minus Bitcoin, minus Ethereum, still in that wedge, right? We're not in a crypto summer yet. We're in the spring, though. We're getting ready for the breakout once that regulation clears up, once the risk-taking environment expands a little more, we should see crypto summer start to rise up, and we're starting to see a lot of good projects starting to come up, right? So Bitcoin below 30K, made a new low since it broke out during the ETF, but we're still on trend, right? We're still on trend. Bitcoin can come right back into 28,000. It's still on trend. It's not over yet, right? It is pulling back on the RSI, so we got some relief on the RSI. If anything, it's a dip buying opportunity. If anything, it comes back to 25K, holds that level. Ethereum, same thing, pretty much consolidating here. Now you got the wedge, or you got the descending pattern here starting to form. Let me get this off. You're starting to get that descending pattern form. And as soon as we get above this level, you get momentum start to come in. And but it is right against the trend, right? We're right at trend support for Ethereum. Altcoins, having some trouble there. Take a look at gold. Gold's on the trend, right? Gold is still trending higher. I'm not really a big gold guy, but some people like to look at gold. Gold's trending higher. It's on the trend. Nothing too crazy yet, right? Gold has been retracing for a while here, kind of like crypto, kind of like Bitcoin, waiting for that new liquidity cycle, waiting for the Fed to drop rates, waiting for the Fed to start their liquidity cycle again. Nat gas is still, reverse head and shoulders. We might see nat gas come up. That would spike energy prices along with oil. We've seen oil marching higher. Turn over to copper, right? Copper ain't doing nothing. Copper it is where it is. Copper would be moving higher if that, the Chinese reopening would have been stronger, but it just isn't that strong. The Chinese reopening is sort of weak. So I expect more liquidity from the Chinese government, from the Chinese central bank before the actual manufacturing sector activity starts to pick up and we get more demand for copper and commodities, right? All right, so yeah, Bitcoin dominance, it is where it is. It is where it is. So we have let's see, what else do we have? XLI Industrials, right? So taking apart the S&P 500, if we look at the S&P 500 by sector, right? What sectors are doing the best? You got the industrial sector still moving up. Okay, let me throw this on the weekly chart so you can see a little more clearly how this is. We're making new highs, right? Industrials are making new highs, still chugging upon their market breadth, right? We look at the healthcare sector. We had a breakout last week. It is coming into a local resistance level, but we are breaking out. So we're starting to see that breakout for the healthcare sector. Rotation into healthcare, that's good, right? Industrials, healthcare, starting to see that. Utilities, nothing yet. Utilities are they still got to report. I believe utilities haven't reported earnings as a whole yet, so we're still waiting on that to see. It looks like the prices too. All right, consumer discretionary, right? Consumer discretionary, the cyclical of the cyclicals, still moving up, right? Still moving up. It looks like Amazon, man. It looks a lot like Amazon. Really funny because Amazon's a consumer discretionary stock, and it looks exactly like Amazon. So we'll see how that plays out. XLP consumer staples, defensive stocks, just moving sideways. Nothing, but it's marching higher. Market breadth is still in the picture. We look at communication services still moving up slowly, right? This is part of technology. This part of tech is still moving up. Financials here have actually been bidding up. So we're seeing some strength in the financial sector, regardless of the banking crisis, right? We had some bank earnings already. Most of the bank earnings already happened, and it looks like the financials are recovering, right? This rolling recession is expanding in some areas, and the financial sector is actually doing well with these high interest rates. That's a positive sign. That's a very positive sign for the long-term health of the market for these pullbacks. Energy sector. Energy is actually breaking out right now. So, hey, oil's breaking out, energy's breaking out. Good sign. Really good sign for energy. I don't want to see oil up, but hey, the energy sector is catching a bid. As we, look at it, energy sector is catching a bid. It's been leading over the last month too. Energy's been up front in the last month. So we're getting the energy sector inside the S&P lead. It's not terrible. We get the rotation back into energy, and then we get the rotation back into tech. You want to see that sloshing of capital back and forth, right, to see an expansion on the overall market breadth. Okay, materials not doing great. Materials are, it's still up. Materials and real estate are sort of lagging there. But if we look at ITB, right, ITB is the builder home construction builder ETF, and it's still chugging to new highs, still going higher. So this is a really good sign, a forward-looking sign. We see that home builder sentiment is up too, and I think the real estate / other than commercial real estate, the housing market could be recovering here. It could be recovering. All right, so that's it for the actual financials. We're gonna jump into, if there's no questions, we're gonna jump into the what we just got this morning on the macro, right? What up, Dimaj? Tesla resisted the fall to 250. Yeah, Tesla finding support, right? I'll throw in Tesla really quick. I'm checking this out. I'm actually looking to add to my position on Tesla if we can see that support, or just hanging along there. I think we get a couple dips for Tesla. So as we see, the trend is still up. So the Tesla trend is still higher, right? This is the trend that we put in from last week. It's an ascending channel, so it's not super bullish, but with this type of momentum, I think it continues. So we do have an ascending channel. It is moving higher. We're starting to bottom out here. So as we, I'm just going to talk about Tesla really quick. Let's dive a little. Actually, no, we don't have to do that. We can stay. Oh, sorry, my camera went out there. Let's see what happened. Figure out what happened there. That's weird. Wonder why that was. That's weird. All right. So, anyways, Tesla looks like it is trying to bottom, or we're seeing the pattern start to bottom anyway. We're seeing the pattern start to bottom. So let me draw it out for you. What you do is when you get a sharp sell off, like 10, I think we sold off 12%. You get a reverse head and shoulders. It is forming, right? You get the shoulder, you got the big head. We probably have one more dip, and then that'll be the bottoming pattern. That should be the bottoming pattern right there. Baba, yeah, we'll check out Baba. I don't know how to my camera on YouTube, so I'm just gonna put it on the charts. I'll just throw us on the charts. I don't know what's going on. Let's see. Yeah, let's just go full chart. There we go. We'll just go full chart here. But this is the bottoming pattern that I'm watching for Tesla. And, the resistance right now, 263. We'll dive a little deeper into that. Probably lose a couple of you on the economic data, but this is important. This economic data is important. Okay. Well, oh, yeah, not this one. Here's what we got today. Remember, we're in a manufacturing recession. We are in a manufacturing recession, and we got the PMI flash today, or the manufacturing flash. Okay, PMI. And today it was, this is United Kingdom. My bad. I was going to say that is low. Okay, this is the US S&P 500 global manufacturing PMI. We've been in recession, and we saw a big bump. We got a big bump today. Okay. And this, we don't get the real ISM, which is the benchmark for the PMIs for the manufacturing activity that leads the business cycle. We get that in a week from now. It should be next Monday that we get the actual PMI. Okay. So this usually leads the PMI, the ISM PMI. And what this tells us is that the manufacturing sector may be starting to bottom maybe starting to bottom out. And we talked about this weekend, which is the new orders are starting to pick up. We're seeing inventories drop. We're seeing new orders pick up in the manufacturing sector. And we are also seeing, what else do we see? New orders, PMIs picking up. So there's a recovery happening, right? Those flashes are happening, and that's going to be very positive for the economy. Once the PMIs or the manufacturing sector bottoms out, that's usually the end of the downside cycle for the business cycle, right? The Fed can now start to look at inflation. As long as we're getting inflation going higher, the Fed can now start to think about cutting rates. And don't say cut rates. They're not going to do it, whatever. Well, hey, they're going to think about it. Chicago PMIs, Fed National Activity Index was still negative. So we're still muddling around in recession territory. But the good news is that we may be rebounding in that manufacturing sector. That's pretty much all we got, right? That's what we got today for that. Let me see. Who is this? Europe is still kind of lagging behind. Services came down a little bit, but they're still above 50. Services are still above 50. So the service economy is already expanding. Now we should be seeing the manufacturing economy start to recover a bit due to a lot of that fiscal policy, due to the onshoring. Right now, earnings. What do we got this week on earnings? We should have Monday. Nothing big today. Nothing big today for earnings. Tomorrow's the big days, obviously. In the PM, we got Microsoft, we got Google, and we got Visa. Those are the big reporters, right? We got some semiconductors next to energy, utilities, and Texas Instruments. All right, so the PMIs may be recovering. We might see the PMIs actually recover. That's a good sign. Okay, that's some good news there. Let's see. What do we have? Baba. Good morning. What up? Good morning, guys. So yeah, Tesla may be bottoming here. We'll dive a little deeper into that on the next. We'll dive a little deeper into that before we get to these other stories. Actually, we'll do some technical. Somebody said Baba. You want to see Baba? Let's go to that daily chart. Let's check it. Hold on. Let's check in with the S&P really quick. Let's check in what's going on with the S&P 500 on the daily chart, okay? Because a lot of people are fearful right now. Yeah, oil's going up. The interest rate decision is on Wednesday. Maybe we dip down, right? But on the if we dive into look at the daily, the internals. Actually, I'm going to take this. Let's put the pre-market on so you can see exactly how the S&P moved. So quickly this morning. Right. This morning, we saw the S&P sell off for the last week. We pretty much sold off during earnings, and we're starting to bottom here. We may have bottomed on the S&P. Maybe it's not. Maybe not yet. But this is good. We're still consolidating at the highs. Okay. Pre-market lows. We came down to the pre-market lows. We found support right at those lows. Okay. It's not over yet. We're not going higher, but there is support. There is some market breadth, or not market breadth. There is some buyers down there. A lot of people having to buy into this, and earnings are going to make a big difference. Now, QQQ dropped a little more. We saw the technology sector still make a new low. So it looks like tech is still going to keep selling off until these earnings are over. Now, I think this is a positive sign because you're getting some relief. You're giving a chance for all those dip buyers. You're giving a chance for the people who are offsizing cash to come buy the Qs if earnings are better than expected. Okay. Earnings are very negative. Dow, industrial average, value stocks, just surging, right? Just surging. They are breaking out of a bigger trend where we tested the previous highs and we're at 52-week highs. So the Dow is taking over. I bet you Caterpillar is moving up. Okay, Caterpillar with the wedge. Look at this. Very nice price action. So Caterpillar has been moving up for a while. That should keep going. John Deere, another industrial stock moving up. I think Boeing has earnings coming up this week. So look at Deere Company going up. A lot of the industrials who are going to benefit from the Inflation Reduction Act and benefit from the infrastructure bill, I meant Boeing, are going to do pretty good. What is no, that's Boom Energy. What is Boeing? BA, right? Boeing. All right. So yeah, Boeing too. Look at Boeing's been up for a while. Boeing has earnings this week. So this is on Wednesday. So I guess we'll find out how that plays out going forward. But the industrials are catching a bid. So the market is strong, right? We'll get that rotation back into tech. Just depends where you're at. There is a bull market somewhere, and it is happening in the industrial / healthcare Dow value stocks, right? Visa reports this week. What is Visa's big trend looking like? Starting to pull back. Stock market is strong, right? The stock market is strong. IWM looks like whatever. Okay. Let's go back to the daily chart really quick on the Qs. The Qs are pulling into that support. We're still on the upward trajectory. Yeah, so the Qs should find support around here, and I expect Tesla to also find support as the Qs bottom out. So Qs are just coming right back into support. Things are looking good. Baba. Okay, we'll take a look at Baba. Baba's starting to move up. Okay, breaking out of this this wedge. Well, this flag pattern. Baba looks strong. Broke out of another flag pattern too. So it wasn't just, we got a couple nice moves. Baba is finding support here. Yeah, Baba looks strong. Once it clears the 95 zone, starts to hold 95, right? Let's draw that resistance. There's a previous high right here. So yeah, Bob was looking at this zone, right? 90, 98 to 95. A lot of resistance there. So any move higher. Now we do have earnings coming up, but not till August. So you have some time. But Baba looks straight. Still has a lot of, I'm not a fan of Baba. Like I'm not going to, I don't really know the big fundamental catalyst for Baba. It's a Chinese stock, whatever. But technically it is breaking out of a nice dragon wedge or, flag pattern, right? And the flag pattern is, you get this big move to the upside, right? Sharp move away from price, consolidates for a while, and then it forms that flag pattern. It's breaking out now. It is breaking out of the flag pattern. So Baba looks solid. Baba is looking pretty solid there. Slime Z, what up? What's going on? So yeah, we got the bull market starting to expand. Things are looking straight. I'm going to flip over to the intraday charts. Unfortunately, our camera went out. Don't know why. Okay, here we go. All right, so we are looking at Tesla on this chart. It looks like it's found support, marching higher. That was a nice retest at the lows this morning for Tesla. Right, and remember, this is a bigger trend. There's a lot of good news coming out. I'm going to have to check Twitter so we can go over those earnings, right? What are the catalysts for Tesla going forward? A lot of good catalysts. Their commodity costs, their input costs are dropping, right? That's going to help margins. So even though the margins are lower, that's just because they lower the prices to gain more demand. And as long as their commodity prices or their prices of their producer prices are dropping, that's going to give stronger margins overall. But looking at this trend, it looks like it is starting to break out of this trend. Maybe it bottoms one more time. I'm going to look for one more bottom. I think it happens tomorrow after the earnings for Microsoft. Who is it? Microsoft and Alphabet. Yeah, we want to see those earnings come out to see. But Tesla looks like it is starting to bottom. Let me take these gaps off. There we go. So if we take everything, we take the pre-market off, I still see the reverse head and shoulders is starting to form here. This was the gap that it filled it twice already, supported. So that's really strong. That's really strong price action. Really, really strong price action. I like this. This is good. Still needs to get above 263-ish, but we'll look at the overall market to see if that continues to move higher. All right. Let's see. What else are we looking at here? Back to the S&P looks strong here, filling the gaps. QQQ. This is just taking the gaps off. What do we look? QQQ looks pretty weak. It still looks pretty weak. Probably fills the gap down here at 372. That's fine. IWM looks like it wants to fill the gap too. The Dow just stepping higher, right? Hasn't filled any gaps yet. Dow stepping higher. Google before earnings. We got Google had a gap up this morning, filled the previous gap. Looks pretty solid. Apple's consolidating. Amazon right at the Amazon's consolidating. So nothing too crazy. Netflix following that big look at Netflix is starting to bottom here too. I'm not a Netflix guy, but it looks like it's trying to bottom. Got Netflix starting to bottom out. It's not done yet. There's still some pressure to the downside, but very nice sharp sell off, showing some support. Nvidia. There we go. Nvidia still on fire. This is a good entry for Nvidia. It's trending so nicely. Nvidia's been trending nicely higher. Obviously, you see when you get 2 points of support on the trend, that's a real trend. So Nvidia's on the trend, and right now, all you got to do is see what you want to do if you want to enter Nvidia, right? Whether it's a trade or whatever. I think when is their earning? I'm not sure when the earnings are, but the break of this trend should set it back in motion to the upside. All right, so Nvidia finding that trend support, filled the gap down here at 439-ish. Actually, it didn't touch the gap yet, but it's close. Right, got close to filling that gap. Maybe it has 1 or 2 more days where it fills that gap. Either way, the break of the trend is going to be nice for Nvidia if it continues higher. Who else do we have? Meta. I know Meta's been on fire. Meta's starting to pull back finally. It's just been marching. That was probably the biggest pullback, 3-day pullback for Meta that we've seen since, what was this, April? Yeah, this is a big pullback here. So once you find support, which is likely to be 288, 290 for Meta, it looks like 290 is support right now. Yeah, that looks like support for Meta. Somewhere around 290. Facebook, Meta, whatever you want to call it. Let me see, advanced decline for volume. We got a new indicator, it's vol D if you have TOS. And this is just showing us the volume is picking up. So there's more volume increasing versus decreasing. New indicator I picked up for more market breadth going forward. All right, let's see. What else do we got here? We also have why is China popping? China? What do you mean, Bukowski? What do you mean, why is China popping? You talking about BABA, JD, or all those Chinese stocks popping right now? JD, BABA? It's very likely that China is starting their QE again. See if I can find anything. Yeah, well, I do know China is looking to do more QE. They are cutting rates, just so you guys know. They're starting to cut rates again. They've been talking about it. So the more they keep cutting rates, the more China keeps cutting rates, the more liquidity comes into the market, the more investment. Pretty much they suck investors in business over there because they have lower rates. Tesla executives are to meet in India's Commerce Ministry month, discuss plans of factory to build $24,000 car. So Tesla over there speaking with India. A lot of stuff in the, a lot of stuff in the pipeline. All right, let's see. But yeah, Baba, all those stocks are moving. CSI 300. Oh, okay. I don't know if I can't find that on here. I know it's on here. CSI 300. Let's see. That's probably the index, right? The Hang Seng index or something. The Hang Seng index moving higher. Well, Baba is having a very sharp move. This is a big breakout right here for Baba. My guess is let's see, let me check the economics. I don't think they had anything today. Let's see, China. Maybe it was on Sunday. They do come out with data on Sunday let's see, this month. They could be just cutting rates. Or it could just be geopolitical certainty coming in through China. They are speaking with Russia currently. If we get that geopolitical certainty, that's going to be another catalyst for the market. Japan manufacturing is still recovering. Yeah, nothing, no major economic data for China. I'm pretty sure it's geopolitical. Something with expectations for regulation to ease, possibly easing expectations. Fed GDP now has for the US Q2 GDP growing at 2.4%. Yeah, so this week we have the rate decision, we have GDP. We're going to see where GDP is actually at. There's a couple interesting stories also. A couple bear pieces out. All right, let's get back to, we'll double up on these charts, put Tesla on this side. Man, the Qs are weak today, though. The Qs are very weak today. Let's go to that 15-minute chart. Making new lows. Microsoft. Let's see. Microsoft earnings. Yeah, a lot of consolidation. I wonder if we're going to get a flush before before earnings. If we get a lot of flushes before earnings, that's actually going to be really good. I think it creates more upside if we get a flush first to the downside for earnings. Tech's been up a lot, right? There's a relief rally. People are definitely taking profits. What up, Bukowski? Bukowski. The index is a modified free float market capitalization weighted index comprised of the largest, most liquid stocks in the Chinese A shares market. Okay. So that's the CSI 300. I know they have two indexes. Shouldn't the bonds be going up on a soft service PMI? I don't think so. I mean, the service PMI is global PMI is still strong. It came down, but it wasn't significant. It had a big bump yesterday. I think it's just consolidating month over month, Bukowski. So to me, the manufacturing data bounced pretty sharply. So if anything, that keeps bonds at bay. If anything, that keeps bonds from going higher. I'm sorry. Yeah, from going higher, because it's like, oh, okay, so the manufacturing recovers. If we get a recovery in manufacturing, right? Let's look at TNX on this side. If we get a recovery in manufacturing, then it puts downwards pressure on bonds. Now, I still think bonds go higher because of the uncertainty and the pressure. And there's a lot of short interest. But you can see here the 10-year treasury yield. This is the yield. This is not the actual bond market. It has sold off all morning. It's been moving a little higher because maybe people are taking their bonds off the table. Obviously, there's less buying in the bond market as the economy recovers, right? So if you get a really sharp, upside move in the economy, if the economy really starts to show a lot of strength, bonds are going to probably trade sideways. You really need something to break, but things look better. Now, maybe bonds go higher when the Fed hikes again. I really don't know at this point. We are day to day. Plus you got oil starting to recover sharply. So that's another risk for the bond market. Oh, Tesla really shooting up there. You got Tesla making a nice upside move. Now that was an entry right there. I'm not trading, but that was a really good move for Tesla. Let me see. Would you say the inflation can reignite? Exactly. I don't think it reignites inflation unless we get like $90, $100 oil. I don't think it's going to reignite. It's just going to make it tougher for the inflation to go lower. And it might trickle around 4%. It might go back to 4%, right? But not reignite. I don't think we're going to get a new trend of inflation higher. The only way that would have happened is if the Fed started actually stimulating again, real QE or stimulus checks, but we're not seeing that. So no, because inflation isn't going to go higher unless the economy really starts to reaccelerate, and we're not reaccelerating. We're still we're trying to find a bottom at this point. So no, I don't see that. I enter the move on Tesla. Let's see how much it will hold. Where'd you get in at 261? That was a nice look at this descending pattern right here. This is perfect. You had some consolidation early. You held VWAP, right? We're on the 1 minute chart. Yeah, we held VWAP pretty solidly, dropped VWAP, but you still have this flaggish price action right here. Not the best, but it got back, held VWAP for a couple candles, couple 1 minute candles. 1 minute's probably not the best, but I like to look at this micro data. Right? So you held that flag and then you got back above. So this could have been an entry right here, 257. Got above. That's where I would have entered if I was trading it. See, where was those pre-market highs? Got right above pre-market highs at 258. Went right into PDC, got above it, tested the previous day's resistance, came back, held the 21 EMA, and then broke out. So yeah, that was really nice. You could have entered here too. Another entry there. So Tesla really looking solid. They had really good earnings. The earnings were not bad. Tesla had really, really good earnings. So this would have been the entries that I would be looking at if I was for Tesla. 261.97. Let's see, where's that at? 261.97. Yeah, okay, you got right at that break. Nice. Break and retest, maybe. On the second pullback. Okay. Yeah, hey, it's strong. The volume's coming in. The volume is definitely coming in. There's still a lot of catalysts here. Let's see. Anything looks geared up. Printers. Cybertruck has a lot of demand. The Indian, you see Tesla India move. Adidas receives. I don't care about that. Yeah, so those catalysts for Tesla, just keep in mind so it can inform your trading or whatever you're trying to do. Let's see. Yeah, it looks good. Looks like it's bottoming there. We've got a nice bottoming pattern. Now, I think we do possibly come back and test 270, and then we come back and then we try to find support. That would have been a good entry, though. Usually that's the entry somewhere around here, but we have some earnings. You never know with earnings, right? These next couple of weeks with earnings, you got the rate decision, which I think does nothing. The market already has it priced in, so I'm not really worried about the rate decision. If anything, it's that oil price, the price of oil and the dollar. That's what I'm a lot more concerned with. Soggy, what up? Tesla's a monster. If investors are not in Tesla, they shouldn't be in it at all. Oh, you came over to YouTube. That's what's up. Nice. Welcome, welcome. My camera went out though, so I don't know what the heck. I just charged it all night, so I don't know what's going on. You know what? Let me hold on. I'll be right back. Let me check something. All right, it was on 4K. That's why the 4K doesn't last. So here we go. Now I'm back online. Just won't be in 4K. Put myself over here. There we go. All right. So dang, that's a strong move though. Nice move on Tesla. Very nice move on Tesla. So yeah, let me read those catalysts to you guys, you Tesla lovers. What the heck? I'm pretty sure I got it reposted on my channel. My profile, there he is. So going forward, oh yeah, earnings too. The earnings picture is pretty weak, so we got to get better earnings. We got to get better earnings right now. S&P so far is at -9% year over year, and it's estimated at -7%. So that needs to change. This is not the real Gary Black. Come on, man. Got so many scammers over here on Twitter. A lot of scammers. All right, so here's the catalysts for Tesla, right, going forward for 2023 and then 2024. Falling EV commodity costs. So the falling costs are going to increase margins, right? At some point during the year, we should hear. We'll probably hear. Well, you could just look at the commodities and tell as those commodity prices fall, the cost to generate the technology is going to be cheaper, and that's really um, the secular catalyst. One of the secular catalysts is that it costs less to make the Tesla car, right? And so they're going to eat up the competition. They're going to eat the competition up. Next, you got the Cybertruck delivery launch Q4. So yeah, that's going to be in Q4, but I still think the stock runs up into that. Usually, Tesla hype gets the stock going like crazy, and then when the actual delivery comes, when the news actually hits, it sells off and goes to find support again, right? So it has outsized moves beforehand more often than not, and then it sells off after the news comes out. That's typically what Tesla does. You got the Fed pivot in Q4, possibly, right? Whether they pause or whether they increase rates. You got the Fed pivot, the 7,500 EV instant rebate for 2024. That's going to bring a lot of demand. You get that instant rebate for $7,500 rebate, should bring in demand. Twitter positive cash flow, maybe that's a catalyst, maybe not. $10 billion share buyback 2024. That'll be interesting. Tesla doesn't buy back stock, but once they start doing that, they're going to basically take supply off the table. Especially if especially if you as you have the FSD story starting to come on the forefront, full self-driving. They're talking with another OEM, could be Ford, could be GM, right? Who knows who it is, to lease that FSD. That's going to increase margins there. The new compact car 2025. I mean, that's not coming out for a while, but they're trying to make a 25 to 30K car, a small compact car, take more market share. Price target for Gary Black is 320 over the next 6 to 12 months. I think it gets there quicker. Maybe it goes up to like 400. I think we hit all-time highs in Tesla this year, right? The way I'm looking at things, if the macro continues the way it is, I think we hit all-time highs, and then we pull back into 300s before we move higher. Maybe I'm wrong, right? Of course, but it looks like with this type of momentum, we're due to break out again. I can't just see. Do you trade futures at all, Sagi? No, I do not trade futures. I look at futures, but I do not trade futures. I'll look at future oil. Do you think Tesla hit the bottom now, Bukowski? I think the bottom for Tesla is, I mean, look at you guys. One thing to think about: it always matters what the macro is. The macro is very important. The overall indexes are very important. So, if the Qs and the S&P have bottomed, then yes, I think Tesla put in a bottom. Unless you have more bad news, for the most part, the bottom for Tesla should be around yesterday or Friday's low, so 255-ish, 256, 255, and then today's low of 254, right? So these are the two areas where you might see that reverse head and shoulders start to form. You got the shoulder, you got the head, and then maybe we have one more shoulder, higher or lower, but somewhere in this zone. So I think the support right now is 254 to 256. You could call it 255. That's the zone of support, and buyers are stepping in. And this is good because what you're seeing is, even though Tesla's starting to retrace, now this move isn't, usually it'll come up, it'll come back down because you got a lot of resistance up here at 270-ish, 269, 270. But for S&P, right, you're getting Tesla move up, and you're getting S&P move up. So what is that telling you? We're getting the overall market support, and that's what I'm saying is, if the overall market has found support, then yeah, Tesla's done. Tesla's going to go. It's not going to go lower. But if the Qs and the SPY sell off further, yes, we could go back and find more support. I think the overall markets are way more important than just the technicals. And when I say, well, it's very important for understanding, how far a move can actually go. If you have the market in your favor, that move can go a lot higher. If not, then look for support. Look for something coming lower. The Qs are still struggling here. So if you get the SPYs and the Qs start to rally, then yeah, Tesla will continue to rally. Too many good catalysts in there. The good part is the Dow is breaking out to new 52-week highs again, right? This is very solid. This is good news. That's why you got Caterpillar, Visa, John Deere. I mean, there's probably, off the top of my head, that's all I can think of. But the Dow rotation is happening, so that's really good. Dow rotation is happening. What is Open Door looking like? Open Door is finally starting to find a bottom down there too at $4. This could be a re-entry, but I like Open Door for a setup. I just think there's a lot of juice in those Tesla calls, which I would not advise to anybody long calls because they're very volatile. But look, Open Door setting up very nicely. Just broke that downtrend also. So yeah, got some good room here. I think the bottom's 255, right? Currently, if we look at the price action right now, it looks like 255 for Tesla, but it could be lower if the overall market rolls over after earnings. Good morning, William. What up? So yeah, that's what I think. Let's see. But intraday, that's a nice. Ooh, that was a nice trade. That was a very nice setup there for Tesla. A lot of strength. That's just good. That's just really good strength. Or that kind of price action just tells you there's so much demand. There's so much demand still for this stock. So much demand for this equity. Thinking Tesla notably auto recludes. Also, their energy sector, their battery, what is it? Their energy storage unit is growing really quick. So there's just so many good things about that earnings report. Even though the headline's like, oh, they, Tesla disappointed on earnings. That was one of the best earnings report they had. They're growing 47% a year in revenue growth. That's insane. Nobody is growing as fast as them. Yes, the valuation is expensive, but who cares about the valuation? Nobody really cares at this point. The valuation isn't important unless the economy is falling apart, unless the macro is getting worse. That, like, if inflation reemerges, it's going to hurt Tesla a lot, because there goes higher rates, there goes the margins. Tesla makes outsized moves. If the news is good, if the macro is good, it's going to go up higher than it should. If it's bad, it's going to go lower than it should. So it just makes those type of outsized moves to the upside, to the downside. So that bear piece, where's that bear piece at? There's some there is some so I found an interesting story this weekend, and it was about home prices not really rebounding. There's a couple, Case-Shiller, the guy who started the Case-Shiller Home Price Index, and Case-Shiller is an indicator, is literally a home price indicator. And the guy who made the Case-Shiller Index, he's an economist from Yale, I guess. He says that when the Fed actually starts cutting rates, we might see, the trend of home prices actually go lower for the first time in like 15 years. What do I think about the financials? Oh, yeah, financials are starting to bottom too. I mean, the bank earnings are done. That's a really good sign. So what do we usually look at? KRE? Oops. If we usually look at KRE is starting to, the regional banks are bouncing. And I remember I said this is good news, or it's if it falls apart, the Fed prints. If it doesn't fall apart, I mean that's good news. So KRE is on fire. Nice wedge here setting up. I'm sorry, nice flag pattern. So the banks are healthy, just like the Fed's been saying. I think the Fed is headed for the first soft landing in history, because the hard landing would have been the banking crisis, right? Look, we're right above. We're basically testing the zone where things really got ugly. I mean, they got ugly up here. Don't get me wrong. We sold off up here. What was this, March 8th? But we try to recover, and basically the last line was here. So we're in the zone for KRE to fully recover. Oh, we got Bank Term Funding Program up there. Look at BTFP, Bank Term Funding Program. That was the emergency lending facility. Now it looks like we're headed for a reverse head and shoulders. And if we do see that, too bad there's no drawing tools on here. If we see that reverse head and shoulders, then you get a breakout on KRE. Well, I mean, that's very good that's going to take a lot of risk off the table. And the VIX, because that's sort of the fear is the banking sector falls apart again. Now, what is it? XLF, on the other hand, still making new highs. Look at XLF just climbing higher, right? Breaking out of the bigger trend. So, yes, financials are strong. I don't really care about financials, because I want to get the proxy trade. I want to catch the big move for tech. Tech is pulling back. Now, I wouldn't be chasing everything else. I'm waiting for the pullback in tech, right? That's me. But yeah, this is good. This is good. We're seeing stronger market internals. And Slime Z, where's your stop at? How long is your trade? Intraday? Intraday trade. I'm in FAS. See, what'd you say up here? Oh, you'd want to load up on a lower Tesla price? Yeah, everybody's in a different time frame, right? So everybody's looking differently. If you're a long-term investor, yeah, you want to see it pull back, and then you want to add to it if you have that capital. But if let's say you're all powdered out, let's say you already deployed everything, well, you might want to see it go up. JG charts on Bluetooth, just FYI. You're in FAS, okay. Do you think it's bad buying into tech right now, even if we're stretched out? Exactly what, right? QQQ? Are you talking about the Qs? Exactly what are you talking about? Okay, here we go. I was thinking of holding because it expires on the 4th next month. I'll probably stop out at 267.39. Well, when I say stop out, I mean like you're to the downside, not your price target. Right now, yeah, price target, that looks pretty solid as a price target. 267. Because I think it's more likely that Tesla, rips higher, and then you get some supply. Obviously, there's a lot of supply up here. Probably sells off again and then finally bottoms. But again, that's going to be heavily depend on earnings season, how it goes, and Apple, Microsoft, all these other earnings. So I wouldn't hold it unless you have a very long-term play. Then yeah, That's good. Should be printing up here. Should look nice up there. So yeah, good. Nice entry. 261. Okay, there we go. 261. Yeah, right under that previous support or that zone. Let's see, 261. Sort of your entry, right? This is the 5-minute chart. I'm talking about tech stocks in general. I've been like 95% cash and missing this move. Well, I mean, if you're looking for a really good entry, you don't, you know, for me, I want to, what tech stocks are you looking at? Because they're all looking totally different, right? They all look completely different. If we look at, so we got somebody asking about, just buying tech in general. Well, I wouldn't blindly go buy stuff. There's some stuff that's up too much, and there's some stuff that has some rebound. So if we're looking on the daily chart here, we're on Bluetooth on the charts. Come support me on here. Come hit the subscribe. Help me out with the algorithm. So let's see. So if we look at tech in general, and obviously there's like 2,000 stocks. There's a lot of tech stocks, right? So if we just start with the Qs, well, I would say, hey, the Qs are pulling back. So if you're looking at an index, if Qs pull back into 372.80, I think that's a really good support zone, right? Obviously, if it drops at, it has support at 368 because this is the gap to be filled. That'd probably be the best entry before you're not long anymore. So 368 is probably the last support for the Qs before it looks like we may be rolling over. I could see it pull back into 368, come up, hit 372, and then form like a lower pattern. I don't think it happens. I think we're still pretty bullish here. But again, earnings it's gonna really depend on earnings, and we got to keep our eye on oil. Now, Tesla, CrowdStrike. Okay, Tesla, I like Tesla. Look, Tesla for the most part, I don't think you get many more chances here for Tesla. It had a large runoff. This was the biggest sell-off that we've seen in Tesla following post earnings. It could go lower, but 255 right now is a support. So let's see, we had what was this? 15% sell-off. Like that's a buy. If you're looking on the long term, that's a nice retracement for Tesla. So I would get long here if I wasn't. If it was me, I'd get long between 255. Even if it got down to 240, 235, that'd be a good buy in this environment where things are if you believe that the economy is starting to bounce, if you believe that inflation is falling apart, I think it's going to collapse pretty soon, as I've been saying. Because it's the rate of change of inflation, right? The rate of change, it's not going much higher month over month, year over year on a rate of on a long-term basis. It's basically going to be at zero pretty soon. It's going to be at zero. The Fed will undershoot it. I think it'll be at zero sooner than people think. And zero means flat. That actually means prices didn't change. That's flat. But if oil keeps surging, then maybe not. But anyways, yeah, I like Tesla at this level. And then you said CrowdStrike. See our CrowdStrike. Yeah, CrowdStrike is still far away from its highs. And I don't know the fundamentals of CrowdStrike off the top of my head. Looks like it is starting to bottom. You got some support at 140. Clear support at 140 for CrowdStrike. But yeah, I don't know the fundamentals of CrowdStrike, but I'd say like if it's gonna support these trends, if you're getting a trend and you're waiting, if you're not a technical guy and you're just waiting, I think the lows are in. Maybe the most important data point is gonna be, I think there's not like one catalyst to go higher or lower. But we do have earnings over the next couple of weeks. We have the big mega caps, the biggest mega cap. They're going to move the market the most, right? They'll move the market the most. So the question is, have we bottomed in earnings? And if we have, then I think the market continues higher. I think the market just continues higher. So and two, we're at the bottom of the cycle. We are at the bottom of the cycle. We're starting to turn. we're in the turning phase of the business cycle, right? We're in the turning phase of more liquidity, easing conditions, all that stuff. We're in that phase. Oh, you're new to the market. Okay. Yeah, bro, you should just ask, like, join the live and just ask a lot of questions. Like, in real time. We'll see the market in real time. We go over this in real time. I'm doing about 90 minutes Monday through Friday. We got like 30 minutes left. And Q selling off right now. Vol Q's up. Dow finding some resistance. Okay, so we're getting some resistance. But yeah, for the most part, it's earnings. We have earnings. We may pull back for earnings. And we're on a day-to-day basis. Like if we lose this support in the SPYs, if we drop this 450 support, then there's going to be a better buying opportunity lower. But if we hold the support through earnings and consolidate, it's going to rip higher. I think we go to all-time highs this year. There's in every single institution, like almost every single institution revised up their price targets for S&P 500. They've been revising it up. A lot of cash on the sideline. People are worried about stickier inflation. So if the sticky inflation narrative disappears, if it starts to dissipate, there's going to be so much FOMO coming into the market. Phase 2 FOMO, right? Wave 2 FOMO. You bought last year. Okay. A lot of people got tricked. It was tough. There's basically supply side inflation. It wasn't really money printing that caught. Everybody thinks money printing is the biggest. Oh, riot starting to move. Everybody thinks money printing is the biggest catalyst for inflation. It's really not. It's not money printing. It's bank lending, because money doesn't go straight to people. Maybe it does with Fed Now. Fed Now is going to be tricky. They could just give you straight money in Fed Now. But for the most part, it's exuberant lending and low interest rates and supply side constraints. That's what caused inflation to accelerate so far, right? Was that we didn't have supply. We didn't have people to produce enough for the buyers. So prices had to go higher. If you demanded a delivery from Amazon and Amazon didn't have the supply, well, they have a low supply. So what are they going to do? They're going to increase the price and say, okay, well, there's two people who want it. We only have one item, not necessarily, but we have one item. So whoever pays higher price, we're going to, we'll sell it to that person. So that's how you get higher inflation, to simplify it. But if you have more supply, more production, more productivity, which I think AI comes online, more people are coming into the workforce, the supply chains are fixed. I don't think a lot of investors, they understand the supply side, but they're so emotionally invested that inflation must go higher and that we must go into this deep, dark recession, and that, the VIX has to go to 50. The yield curve is screaming. They're so invested in it that they just say, oh, everything's going lower. Now, I know for me, look at, if oil breaks out, then yes. And it is breaking out. Oh my goodness. Oil's starting to break out. So this is not going to be good for the inflation for August. August inflation may tick up. It may tick up if this continues. It may tick up. But that also depends on shelter prices. Shelter prices are still falling. So it may tick up. We'll see the expectations. The expectations are going to be what's more important. So here goes oil retesting. But hey, that major resistance level is still 83.50. 83.50, getting a relief rally here. Very tight supply. Okay. Yeah, we'll keep our eye on this. You bought TDOC options 40 January 2024. Okay. TDOC. I know those are cheap options, but I would just suggest this. If you go TDOC because of the type of company it is, I would try to reach out to 2025. They're still pretty cheap. Unless it's not a big risk to you, but 2024 is kind of early for TDOC. It is kind of early. And I would wait for the breakout if you're looking at TDOC, because I'm looking at TDOC too. I almost got in a couple times, but it couldn't hold above that previous level. So I'll throw TDOC up here. Healthcare is breaking out. They probably need a really good earnings report, to be honest. I'm guessing you bought it on that candle, right? That big upside candle with Microsoft. A lot of people got shooken out there. This might be a good buy on TDOC now. You got support at 2270. But again, you want the momentum to, because this thing could consolidate for another 3 months. Just the theta eats you away. The theta eats away all your, okay, you bought it today, maybe not bad. The theta could eat away your contract. 6 months is far out, but I would look even further. I'd look out till 2025. Maybe even wait for more momentum to come in. But yeah, TDOC has a sharp, once ARC breaks out, probably needs a good earnings report. Healthcare is already breaking out. And they have the Microsoft stuff going on with them. Pretty solid company. Just like Zoom, right? I think Zoom is a good opportunity here. I like Zoom. Let's see. Zoom above that level. It got above it a little bit. Let me see. Let me drop back to these macro levels. Yeah, Zoom is, these moving averages are starting to move on Zoom. We're starting to get a golden cross, so looking forward to that. My charts are chopping, snagging my little 7%. I'm done. TX Scooter. Let's see. Bukowski. Wouldn't higher oil price help restrict core CPI? We all know headline CPI are volatile, and since we are so low now, 3%, it shouldn't matter as much. Or do you think it could spiral with energy salary? I don't think core oil going higher has anything to do with core, because it's just core doesn't take into account energy, obviously. Now I know people focus on core, and if they focus on core, then I think core keeps making more progress. We might actually see headline lag and core make progress. So that's going to be tricky, right? That'll be tricky. You could take that as a positive or a negative, who knows? But yes, if oil goes higher, it doesn't affect core. So core might actually be better. Help restrict core. I don't really know how it would restrict core, because it doesn't take into account core, right? I mean, core doesn't take into account oil. So I don't think it would restrict core. I don't see how that connects at all. Maybe I'm missing something, but I don't see that. We all know how headline CPI is volatile, and since we are so low now, 3%, it shouldn't matter as much. Or do you think it could spiral higher? I think the only way it spirals higher is if we get above 38.50. I'm sorry, 83.50 in oil. And I also think it's going to be the expectations, because gas prices will move higher, and then people's expectations or confidence goes down. So does it necessarily mean headline goes all the way back up? No, but it could suppress market momentum, because inflation is not as, it's sticky, right? It's staying a little stickier. So this is not the worst case scenario. The worst case scenario is that oil gets above 83.50, runs to 100. That would cause panic. That would cause panic for sure. And the Fed would keep hiking, and then the market's going to have to correct because it didn't see this coming, right? But you also have the shelter could just drop tremendously. And if that's the case, then CPI really doesn't move much, right? And then core is way lower. So now you have headline moving up to 3.5, and you have core dropping to 3. So who knows? Who knows how it actually works out? But we do just got to consider, like, hey, the more bullish oil is, the less bullish the macro is going to be. But that shelter could come in, because I could see the Fed pivoting and saying, oh, well, yeah, core is falling, but now oil is going higher. So that's a risk. So I just think that they're trying to keep they're trying to hold expectations tight, although they're becoming a little more dovish in their language. They are becoming a little more dovish in their language. More people so they can pay rent, fewer renters. Well, let's talk about that. Let me go through the highlights of these whole shelter prices. Yale economist Robert Schiller predicts that the more 10-year home price gains will end once the Federal Reserve tightening cycle concludes. S&P CoreLogic Case-Shiller Index of the home prices has been steadily increasing since 2012. So home prices have been steadily increasing since 2012 and peaked in June of 2022. So we finally got that peak. And he says, Case-Shiller, the guy who started the index, that we could see a downturn in home prices followed by a resumption of upward trajectory in January. Fed rate hikes in the past year boosted mortgage rates, leading to reduced existing homes, obviously because people don't want to leave their homes, and increase in home buyer demand. The fear of further interest rate increases has influenced both homeowners and new buyers, driving them to enter the market before rates rise even. Unusual behavior in the index, blah, blah, blah. Well, he basically says the end of the hiking cycle is going to mark the conclusion of steady home price gains. Therefore, home price gains start to fall because you can now because the average home size has been falling for a while. So maybe you create more supply for the first time, and then those prices come down. A lot of people are changing how they want to live, so that could cause less demand, and you get more supply, less demand, you go lower. Also, Barry Ritholtz from Ritholtz Management. That's where this is actually the boss of. This is the guy that what's his name works for Josh Brown. You guys know Josh Brown. He works for Barry Ritholtz, and this guy says that that he agrees that rate cuts will actually lower housing costs and alleviate the constraint on the housing supply. So yeah, we'll see. Anyways, that's just a secular story that, hey, oh my goodness, what do you do if housing prices actually fall going forward, right? They don't actually move up. What do you do? How do you play that one? Does that hurt real estate? What is H? I don't know what H is. Nice engulfing candle there. Yeah, Tesla's looking strong. 264. Very strong for Tesla there. Please check Bitcoin. It's pulling back. Where's the next support? Yeah. I think we can look at Bitcoin futures on here. You see? Hold on. Give me a second. I'll be right back. All right. BTC. Yeah, let's see. Bitcoin. Bitcoin is pulling back. Yeah, Bitcoin looks interesting. This is the futures. So let's draw the trend, right? From the breakout. From the breakout area, we'll draw this trend. So we're still on trend. I think the support is going to be somewhere around 20. I would say at the lowest, 27.5. Bitcoin comes down to 27.5. That's the trend support. That's also the 50, 100 moving average support, somewhere around there. So I'd say 27.5. at the lowest, it capitulates. It's like Tesla. It'll over exaggerate price and then it'll come back up. If that breaks, then yeah, we're going right back to 25K, which is very possible. We come back to 25K, but the more we consolidate, the better, right? I think there's a lot of buyers at 25K. So maybe you scale in a quarter at 27, 28. You scale a quarter position, and then you scale in half your position at 25 to see if it holds. If it goes lower, while you take the drawdown and you wait. If it moves higher, then you start adding as it breaks back above those resistances to get your full size in. If you're trying to get fully sized in, that's how I would do it. I'd say 28 to 2750, and then 25K for Bitcoin. IWM is finding a bottom here. The Q's found a bottom. Vol, that's a really good index. That Vol, advanced decline for volatility, or not for volatility, for volume. I like that. Advanced decline is kind of weak right now. Zoom, unfortunately, is struggling. Zoom is still struggling. But I think it needs a good earnings report. I think Zoom just needs a really good earnings report. I would say 25K, easy pullback. Yeah, 25K for sure, Dimaj. 25K is the level. Like, if we come back down, 25K is going to be the level. I don't see it breaking 25K. I don't see it breaking 25K. See, ETH, how's ETH looking? ETH comes, if ETH breaks, it's going to... ETH looks really crappy, to be honest. It looks like crap. It's rolling over. Looks like crap. Too bad they don't have Chainlink on here. And TOS. Look at Tesla, another high. It's coming near your price target, Manny, huh? Coming down near your price target. Look at that strong move by Tesla. That's what I'm talking about. That's what I'm talking about. And hey, we could sell back off, but it tells you there are buyers waiting. You know, there are buyers waiting down there. 10-year yields, 2-year DXY. We need that dollar to roll over. The stupid dollar, man. The dollar, like, bro, it broke down. And then now it's starting to retrace. But this is what we want to see, that dollar weakness. You see the moving averages are all screaming dollar lower, right? All the moving averages, the 100, the 50, they're starting to cross. They're all pointing lower. I think the momentum is lower. And we should see the dollar. Once the dollar rolls back over, that to me is the signal. Like, we've already had the risk on signal. We've already had it. But now we're looking for the confirmation. And the confirmation is that the dollar starts to make new lows or starts trending back down, right? You have these periods of uncertainty. You know, it's not like, oh, this is a signal, but you have periods of where you're long or short to get the absolute low. And then, you know, if that period works out, it works out. And what I'm saying is, if the dollar gets rejected and gets back above 100, you're now in that period of, okay, I'm going to get long stocks. I'm more interested. I'm going to add more size, or I'm going to hold this longer. I'm going to look for a longer dated option, right? And then maybe if it comes back up, then you're like, all right, I'm out. But you have that period to decide that. If it drops super low, you might have just missed the whole move, right? Or if you do it while it's going up, that's not smart. It goes up higher, crushes you even lower. So you have these small pockets of time to make a decision. You have these small pockets, and you got to know where you're right, where you're wrong. Where are we wrong? We're wrong. Obviously, if the dollar breaks back above this this wedge pattern or this descending channel, which would be, you know, 103, gets back to 105, then I'll be like, what the hell's going on? Something's not right here. And it would be breaking these moving averages. So far, you know, maybe the dollar comes back to 102, maybe. I think earnings season is definitely causing a lot of selling. So this tells me that this break lower and this move higher, I think it means there's a lot of cash, gunpowder on the sideline. So hopefully earnings bottom. That's going to be the big catalyst. A bottom in earnings. Tesla's going to make millions. Yeah. Looking at trading economics macro forecast for DXY. Okay, looking at trading kind of macro forecast for DXY. Yeah, that's the dollar's complicated. It's really complicated. I just like to look at the signals. The best signal is literally the Fed starts look, uh, they start printing monetary stimulus. That's the best dollar signal for weakness. Monetary tightening is always the strengthening tool, right? But rates are still up and the dollar's weakening. So this dollar move too could be that the Fed's going to increase rates again. Maybe they take their pause off. A lot of things to look at there. I still think we're at the end of the hiking cycle. Been saying it for probably 3 months, and it doesn't mean it's ending now. It just means like they're becoming more dovish, right? We saw that in the macro report this weekend. Their dovish language is increasing. Their optimism on the economy is increasing, but they're still hiking rates, but at a very slow pace. They went from 75 basis points to 50 to 25 to a pause. Now they're going to go back to 25, right? So they're starting to speed back up. I just don't think they can maintain that speed. I think if they do hit 25, that's it. I think there's a possibility that they actually do hold the pause. Now with oil going up this high, maybe not. I'd be surprised with oil going this, with oil moving this high. I'd be surprised. I think they do hike. I do think they hike on Wednesday, but yeah, this dollar, that's what we're looking that's what we're looking at for the dollar. I'm going to extend this. There we go. So yeah, we need the dollar to come right back below that zone. It's a little stronger than I'd want it to be. And two, this should be knocking oil. This is actually a bad signal, guys. This is a bad macro signal. It doesn't mean go sell all your stocks, but you're getting the dollar move up and you're seeing oil, right? I don't like that. I really don't like that. Oil and the dollar moving up together is very bearish. Strong dollar, risk off, higher oil, more inflation pressures. So that's not good. That shouldn't even be happening. But that's a risk off signal. It doesn't mean, oh, go risk off. It just means be careful. Be careful. Be careful getting long anything. It's unclear. The macro is not very clear. Dollar tightens financial conditions and oil tightens financial conditions. That's why. That is exactly why. Swings or day trades? Swings, positions. I'll do day trades. I haven't done it lately. I haven't been doing it lately just because it's hard to make content and do like day trading, like really focused day trading. I tried it for a while, but I like doing content. But if I did day trade, it would have been this Tesla move right off of VWAP, right off PDC. Very strong. Manny, coming close to your price target, Manny? It's looking good. 122. Okay, we're at 122. What is this? S&P revenues. Might just sell here. Yeah, hey, that was a good move. That was a good move, bro. That was a solid move. I like that. Let's see. Let's see. Could it go higher? You got the S&P at near resistance. You got the Qs at resistance. You got vol Q still moving up. $475. Okay, yeah, this is a resistance for the SPY. SPY resistance here. You got QQQ resistance. Let's see. Qs are kind of weak. I think that's a good move. Qs are weak. SPY is weak. Volatility is in. Not volatility. I'm sorry. Volume is still increasing though. There's a lot more volume right now increasing. I think because the Dow, is it the Dow IWM starting to pick up small caps? Palantir looking like Palantir back at that 16 level. Open door, I believe, is shooting higher. You got that. ZM is weak today. AMD, you haven't looked at AMD. And AMD's been bouncing off that 108, 110 level. That's been it. I'm out, man. AMD shook me out so many times. I'm not even trading it. I'm not going to swing trade it. I'm trying to get a good entry. I know it can slip lower. Like AMD is dangerous. This thing can slip out of nowhere, especially with the chips already running up and sort of that uncertainty about chips. Nvidia is a solid move, but I think there's just not enough demand for AMD. Not till we see another earnings report. It's going to take the earnings report in August, likely, to get AMD going again. Guidance. You want to see guidance? Tesla's going to make millions, 100%. Yep. Got to get that guidance. All right. So now the negative report, where is it? Earnings calendar. Ooh. The heck? Bro, I don't want to subscribe. The hell is this? Is that what it's making me do? I just read it yesterday. Damn, that's annoying. Oh, well. Oh, we got GDP too. GDP at the end of the week. We'll see how that comes in line. Hopefully GDP is pretty solid. Let's pull up this. Why does this volume look so weak? Hold on, let me see. Need to extend this volume. It looks weird. There we go. We're also I'm seeing some bearish divergence here, Manny. Right? Tesla's making lower lows, lower highs on the RSI. Not to say it can't move higher, but that is a bearish divergence. This is just the 3-minute chart. Let me see what it looks like on the... Uh-oh. What the hell just happened? Maybe it makes one more move. Let's go to that 5-minute. Oh, the 5-minute, it's strong though. 5 minutes making new highs, so totally different on the 5-minute chart. Totally different on the 5-minute chart. Okay. Bullish sentiment jumps to 51% last week, highest since April of 2021. Yeah, a lot more bullish sentiment now. Bullish sentiment, still bearish positioning. And I don't know if I'll talk about this today or tomorrow. You know what? We'll go over this tomorrow. It's basically very bullish internals from what I'm seeing. Very, very bullish internals, as in people are still off sides. They're still short the S&P, although sentiment is starting to get very bullish. So what's going to cause those people to buy is going to be, okay, earnings aren't that bad. Okay, the economy is not going in recession. Okay, inflation is still coming down. All right, we're bullish, but now let's actually see what we do. So you have sentiment. That's what people believe, what they think, how they feel. And then there's what they actually do is positioning. So we need that positioning to actually jump. Before, I wouldn't even be bearish until positioning really starts to get, back to the highs. And positioning is still negative, still very negative. So that's, that could push S&P. I think this pushes S&P to all-time highs, this type of bearish positioning. There goes Tesla. What a move on Tesla. That's what I'm talking about. You got that. Oh, what is this? The 15-minute. You got that opening print. So let's peep this out really quick for Tesla. Let's peep this out. We've seen this. This is how you know you have strong buyers. I've seen this on the 15-minute chart so many times. Is right on the open. This right here is a signal that basically it's signaling to me when I get a capitulation or a tail There's very strong volume on this tail. More, strong what is it? Buying. What is the whole signal here? I think the signal is extreme capitulation, or buyer stepping in on a sell-off, right? And pushing that price higher. So we have that big capitulation here. Now, if we go back, hopefully this chart goes back further. How far does this go? I might have to edit this. Time frames. Let's go 15 minutes. Let's go back to 30 days. All right. So we've seen this signal before when Tesla was going monstrous. Tesla's making those big moves. So this is a 15-minute. We saw it back here. I remember this, 248. Right on the open, you got that big capitulation on the 15-minute, big old tail right below, right? It went right below pre-market and then exploded higher. And then went up for a couple days. You got the same thing on the open here. It wasn't as big, but you had a big upside move. Sold off, and then we came right back into that 250 level, big tail, another 15-minute tail that gets bought up, right? All green. The volume's all green. Maybe I need to zoom in there. Yeah, there we go. See, look at that, all green bar. That's a good buy signal at the open. So Tesla's had these at the open buy signals that show you, right? It doesn't mean, oh, we're going higher, you should invest now. But what it tells you is you can be confident that there's huge buyers stepping in and they want to buy the lows. That's when you know you're bullish, not the highs. Those are traders. People coming in at the lows is very bullish for Tesla. You get it again here at the open. Now, it's not as big of a tail, right? Not as big of a tail, but you get that same price action happening there. And I believe before we moved up, let me see. Yeah, 240, we started seeing that. Got it here. 1, 2. This one was pretty big back here. This one was pretty big right below the lows. We've seen it twice at the same. Look at this, same level. The same level, the 249, 250 level, same price action. It gets below pre-market lows and the bulls step in, all green. Below pre-market lows, bulls step in, all green. And this was at 250. So I think there's just a lot of support at 250. Did we get it any last 30 days? I think this was even before that. Same thing here. So multiple examples of that tail forming at the lows. Look, it was here again 30 days ago. This was way back at 221 though. So this kind of started the rally though. 221, big tail. And what are we getting right now? What do we just get today? Which I think we see this again. I think we're going to see the tail happen again. 15-minute, right? Yeah. I think we'll pull back and show it again, but we're getting another tail below pre-market lows. And then boom, they step in and look at the price action moving higher. So will we get a sell-off? Yes, but expect that 250 to 255 level. They're stepping it up too, right? Making higher lows. A lot of demand there, which is why I'm like, forget AMD, man. It's a little uncertain. Right now, Tesla is the play. Tesla's strong. I'm looking for another pullback with the open. Look for this pattern right here. If you're looking for a trade, it's going to be more than that. But if you're looking to enter, or like I might add a contract here. You're going to see this tail, same thing, drop. This is kind of annoying here. Let me remove this box. But you're going to see the pre-market lows, right, get violated. Everybody goes short. They go short, and boom, the buyers just step in. So I'm looking for that big tail to come in on the 15-minute. Obviously, your stop is below the pre-market, but yeah, looks pretty solid to me. So yeah, tomorrow we're going to go over that bear report, just so you guys can see what is the, what are people really worried about? What is the big worries? Today we're warming up for the week. What is bullish? Oh, well, we're on the Bluetooth. We're showing the charts on Bluetooth, bro. I got to move you over to the Bluetooth so you can see the charts. Go subscribe, check it out. All right. 266.47. That's not bad. 266.47. That was solid. Yeah. I think it's going to hit like 268 and find some resistance. So that was good. That was a nice trade. Pat on the back. I need to get this working again. Okay. See, we are now 135. Crypto news. Do we have any new crypto news? Other than CCIP going online for Chainlink? Tokenization? All right, we're hitting that 90-minute mark. I'll give you guys a couple minutes to ask questions, comments, whatever it is, before we check out of here. Let me see if there's anything interesting on CNBC. Usually they go all day, so sometimes it's just a bunch of bull crap. Big tech earnings in full swing. Yeah, we know that. Alibaba. ECB rate decision. Downgrade on American Express. White House on AI. We've heard that. Yeah, I don't think there's much here on CNBC right now. It's Monday, getting things popped off. But tomorrow we do have the big earnings. We'll see how the market responds. Remember, it's going to be a good thing if we see a sell-off going in earnings. That'll be a really good thing. I think. Steve Eisman on the hardest thing that he's trying to do at investing in pro stocks. Is this today? There's no way this is today. Oh, this is today. Okay, more analyst upgrades. I'm just going to go straight to the Tesla upgrade because we like to talk about Tesla. There's Nvidia, Shopify, Apple guidance. Oh, that's going to be good though. Apple, Deutsche Bank reiterates Apple buy. Okay. Who increased their Tesla target though? Where is it? It says on here Tesla. Oh, Twilio, nice. We're downgrading our rating on Twilio, underperform. Dang, RBC downgraded Twilio. Here it is. UBS downgrades Tesla. Oh, they downgraded Tesla. Oh, they're saying the growth is already priced in, basically. We downgraded a neutral because we think the recent strong share performance fully reflects the strong demand response seen after price cuts as well as a solid execution in 2024. So basically, they're downgrading to a hold instead of a buy because the price already moved up so much, right? Valuation got a little too good. Nvidia, Goldman Sachs is a buy. So Nvidia is getting the price targets going up on Nvidia. Meta, Evercore is bullish, reiterates buy on Meta, outperform. What else? Big tech do we have here? Netflix outperformed to neutral, so they pulled down Netflix too. Apple got a buy. All right, cool. Now, where's that other story? See, no evidence of recession. Steve Eisman, the investor who called and profited from the subprime mortgage crisis. They're always signaling dudes that that did good in the 2008 financial crash. It's a totally different market here. Totally different market in my view. Let's go to that 5-minute really quick. All right. So Qs are starting to actually pick up. Man, this is really fueling this Tesla move higher. Qs are picking up. So Steve Eisman's is saying, let me just try to get through this as quick as I can. Then we'll be done here if we have no more questions, because people are going to tell you that the recession is coming. We need a black swan for that to happen. There's no evidence of recession. So as long as there's no evidence of recession, I think the market will probably continue to melt up. I agree. People are chasing. Eisman says, I agree. People are chasing because they're off size. Just like some of you guys, right? You're thinking, hey, should I buy more? Market psychology. Because at some point you're like, dang, the pain going up is higher because I can take a 25% drawdown in the market, but I can't take missing 100% up move, right? Or unlimited losses to the upside. The Dow Jones Industrial Average just pulled off its 10th straight positive day Friday, notching its longest rally since 2017. Yes, and by the way, the Dow never has a 9-day winning streak or 10-day winning streak unless we're in a bull market. The S&P has rallied more than 18% this year after scoring its best first half since 2019. The latest leg of the rally was triggered by softer than expected inflation reading. What is this? Which could give the Federal Reserve some breathing room in its tightening cycle. We came into the year where most people were predicting the most anticipated recession that never happened. Yep. Remember we talked about that. Everybody's anticipating it. They're off sides. And I still think there's a lot of cash on the sideline. A lot of people are very conservatively positioned and they're trailing. So they've tried to keep up. The investors said that he's fully invested. Oh, so he's saying that he's fully invested and he's not going to take profits because of the high capital gains tax. Oh, that's pretty smart. Today, the tax implications are onerous. So if you sell something that you have a big gain in, you pay 35% tax. We'd rather stick with the positions than just hold them, Eisman said. So you don't really have people actually selling. This is the guy from The Big Short. Okay, cool. Eisman shot to fame, better, but okay, whatever, blah, blah, blah. What is he buying, though? That's what everybody wants to know. The one thing I worry about is that the Fed has raised rates a lot. It's certainly possible that we have a very negative impact on the economy, and we're very worried about that, but there's no data to support it at this time. Very true. I say that's really true. That's really good. So, and plus those PMI flashes are looking solid, right? The PMIs are starting to increase. It topped at your profit target. That was good. That was a good trade, man. If I had the stream deck working, I would shout you out there, but still waiting for the technicians. They don't know what's going on. It's kind of annoying. All right, so anything else? Let me see. Am I missing anything for today? It's Monday. It's going to come down to earnings, right? We got earnings in the pipeline. We got big tech earnings coming up. And I think that's going to be the deciding factor. As of today, SPY, S&P 500, pretty much consolidating at the high still. We're still very elevated. A lot of buyers coming in. Oh, no, wrong chart. A lot of buyers coming in. I think we're set to make new highs here. While the Qs sell off. This is perfect. The cash from the Qs are basically rotating into Dow. So we got the Qs, right, moving lower for the past couple of days. And actually, we'll put on that 4-hour chart. We have the Qs moving into support somewhere down here, maybe 732.80 after earnings possibly. And then you got the Dow moving up, infrastructure bill, right? More builds, the economy is strengthening. So you got these value stocks, not all of them, but for the most part, the Dow is breaking up. And then IWM's been leading this whole month. So It's taking a breather, but very good, very nice little pattern here on IWM. Got a flag there, so if it holds this support, it's going to go higher. Pretty much we're in a bull market, still moving up. Hopefully earnings come out better than feared. Tesla's still moving up. All right, well, news of the day before as we go out, we had the PMI flash, right? The ISM manufacturing, which is remember the economy, everybody's worried about the economy rolling over and going into a deep recession because of the rate hikes. But what we're seeing here is that that rate hikes might take longer to really factor in, or I think the rate hikes are, the pressure on financial conditions are actually being matched with the fiscal policy, just like it did in 2017 when the Fed was hiking rates. Okay, the Fed was hiking rates in 2017, 2016, and they were shaving their balance sheet or keeping it flat, less liquidity in the market. But we had the Trump tax cut. So you had fiscal policy, fiscal stimulus in the market. We get fiscal stimulus today, CHIPS Act, Inflation Reduction Act, infrastructure bill. So when people ask you, why is the economy still strong? Why is the stock? Now, I'm going to say it over and over and over. And so those rate hikes aren't hitting that hard because you have fiscal liquidity coming into the market, right? At the same time, the biggest worry is that manufacturing leads us lower, housing leads us lower, but the housing market looks like it's starting to bottom actually, right? Home builder sentiment's going up. The ETF is going up, which is a leading indicator. We're seeing new home builds go up. The sales might be weak, but people are building, okay? Manufacturing side, it's in recession territory. It's been going lower, but now we're getting a signal that the manufacturing sector could be bottoming because we got new orders going month to month higher, and now the S&P flash, the global flash for the manufacturing sector, just made a big bump higher. So maybe next week on it'll be next Monday, I believe, should be next Monday. It could be Tuesday, Monday or Tuesday. We get the first of the month is where you get the ISM PMIs. If that goes higher, that's going to be yields might go up, but that's a signal that the economy is starting to recover. This thing is starting to shift now, and it's a good sign. We're battling negativity and positivity here. Biggest risk to the market is oil, so that's the thing we got to keep our eye on. I really hope oil starts to slow down here. It can't get above 83.50, or it doesn't get above 83.50. Let's see who. Yeah, so I hope that's the case, but we'll see. I'll catch you guys tomorrow morning, same time. If I change up the time, I'll let you guys know. But I'll catch you guys tomorrow. You guys stay blessed today. Get your diet in, get your exercise. Stay blessed. Learn something new. Get this exit music on here. Bye, bye, bye. No, I'm just kidding. Don't do that. Unless it's Tesla. Thank you guys.